The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi, everyone. I'm Basil Chapman. This 24th day of November. My pleasure to be here Monday through Friday. Of course, this week we've got a couple of vacation days. And 11 o'clock till noon at 877-927-6648. Thank you, John. Thank you, Steve. A couple of great hours. And we've got programming all the way through today. Now, hey, whoa, isn't this interesting? The Dow right now is at 17,890. Remember on Friday, I believe it was on Friday, I mentioned that I had what I call the Chapman wave trend gauge flashing. It flashes a yellow light and suggests that regardless of what happens intraday on Friday and however strong the futures are at the open or Sunday night or even at the open on Monday, there should be an early morning pullback to negative before a rally is attempted, and then there's a whole brand new day that unfolds. And lo and behold, the Dow has, well, even as we're doing it, speaking, it could be doing it for a second time. Did dip negative. The whole thing is based on my reading of the Dow. Even though this is based on many other factors, I use it as an indicator for the Dow, and it has an incredible success rate. I have two indicators based on Richard Arm's Trend Index. I call it the Chapman Wave Trend Gauge because it has absolutely nothing to do with what Richard Arms had discovered and basically invented a whole new tool. But, of course, I read it my own way, and I found that the way I read it, it gives a heads up to say that either one of two things are happening, depends where the reading is. If it's on the upside, it says that within two sessions, there should be a very strong rally in the futures, which should impact the cash S&P. The other reading says if it's at the lows, it implies that there will be the very next session. That's why it's such a beautiful indicator, because it already tells you the day before. Don't panic about upside action, because there will be some negativity, at least in the Dow. Dow just went negative. And it says that after that, other things can happen. But the indicator itself is to say that regardless of where the futures are, this particular wonderful indicator flashes to say that with an accuracy rate, I think it's over 96%. It's probably about, I'm not even going to bother to measure it because it's missed maybe twice in the last year and a half or so. So, that's nice because it's worked its magic, and now we can look at the market a little bit differently. Now it's starting fresh from wherever it happens to go on this pullback. We'll have to reassess. So in the meantime, let me just give you numbers. At this particular, I'll give you the numbers, and since this is Monday, the very first day of the week, of the new week, the E-mini is up 4 at 2,066. It hit earlier, it hit 2,069 round number high. This could be a peak E in the daily. Could it have recycled and this be a brand new A? Absolutely it could have. But I have a particular way of reading this pattern that's forming right now based on a number of factors, but one in particular, and that's saying right now that there's really a good chance that there are a couple of more flurries to the upside, that we're running out of energy, that now let's go to the Dow. So the Dow is at this particular point up 1. Having been up a little more than about up 35 at one point. With the high of 17,894, I'm going to add the all-time high of 17,894 hit on Friday, saw the close, which was at 17,810.06, see a lower low today of 17,808.46, which is exactly what the technique is meant to do. And now look what's happening. There's a possibility that we're going to make an F/B in the Dow, and I have a methodology which I'm going to be showing my subscribers come tonight when I start doing tomorrow's report. Well, actually, I already started it during the day. And that's going to be suggesting very strongly that we are within days of a pretty decent pullback. And this is going to be very interesting. Why? Because if you go back historically, you will find that a majority of the time, if the Dow survives the September-October decline, and then goes on to make a recovery high, especially an all-time high, but we'll talk about a recovery high, there's a really good chance that that the Dow will close at or close to an all-time high on the last trading day of the year. However, within that, I'm getting signs to say that the market, based on a number of factors, is becoming rather overbought. And because it's becoming rather overbought, any pullback could be quite sudden and quite sharp. The other thing that I'll start working on this week, I didn't want to do it up until now, I wanted to see how Monday pans out, we'll see how the close is that I believe there's a chance that we're in the phase that says shorter and shallower declines as the market goes into a parabolic stage. I don't know if that's going to happen, but it's something I'm entertaining. I'm not sure what on earth could take the market up to a brand new level when you're looking at the IYT, which is the iShares of the, let me pull this back here, the iShares of the transportation index screaming higher, leg F in the monthly, leg F/A, this is very important, in the weekly, having broken out with no chance of a Groucho Marx eyebrows top, because this is a brand new move. It says right now at 164, the transportation index could pull back 158 from 164 to 158 to 158, 156 will be absolutely critical in the weekly chart, because it closed below into the 155s to say, oh, okay, folks, this is just a right arm extension in the weekly chart. Be careful. And the daily chart is at D. Unbelievable. D, I'm getting D's and E's. I'm not even getting many F's, but D's, E's, and some F's in all the charts on a daily basis. Look at this. The IYT had a Chapman wave, well, you can call it a flag pattern, breakout to the upside to all-time high at 163.37, I believe that is, on Friday. No, 164.80, and today's high is 164.75. Missed it by 6 cents, making a new high. Now, what's important about this is look what's happening. You've got the Dow. I'll run the numbers now. The Dow is up 4. It made a high of 17,894 on Friday. It's an F/B. I suspect it's an F. The weekly chart is bumping up against, I showed this to my subscribers on my opening call, a lot of work I did this weekend, but I didn't show that many charts, maybe 5 or 6 that I sent out that are for Monday, but I start sending them out as I complete them over the weekend. And I showed this trend line, I showed this resistance area, and so far we haven't closed above it. The week has just begun. But that monthly chart is still in leg E and very strong. So as it stands right now, parameters to watch going into the Friday close this week. Don't close under 17,600, because if that happens, I would have to say short-term sell signal is likely. That won't be a short-term sell mode until other things happen, but at least probably a short-term sell signal will be flashing. And on the upside, wow. That 18,000, I've spoken about it before. I look at millennium levels as psychological barriers, and I'm going to say that 17,000, we just went, look at this, 17,000, we just went right through like a hot knife through margarine. And the 16,000 was a barrier, up and down, up and down. So I'm suspecting 18,000, the 17,009 hundreds all the way to 17,980s, going to be a lot of resistance. So let me just complete this thought and say that I have no technical indicators right now in the weekly to say that there should be a failure pattern from 97% in the stochastic down to 78% to say, whoa, real trouble? Not yet. A monthly chart, still very good. Daily chart's giving me at least 3 indicators that are saying, be careful, be very careful. Should be another one, okay? Anyway, so the S&P, SPX.X, there we go. SPX.X hasn't made a new recovery high. This is F/B. So F/B. I'm inclined just to put an F right now. There is an alternate count, but just my weighting right now says it's an F, and there could possibly be one more peak. We'll see. And there's that resistance level in the S&P right there, the inside track, Chapman wave inside track, repellent resistance zone. And now what we're looking at is the QQQ series, very steady, nice move, breakout pattern, the body, the neck. This is still the neck formation. And I suspect we're about to make the head formation, and the beak will come very soon. It's at 104.40. The high Friday was 104.69. 104.69, and we'll see if it's going to break out one more move above that. But there's that resistance area in the weekly chart. Let's go to gold at GC. I'll go to the continuous contract. Peak B, the GLD is not. It has a different notation altogether. It's at peak D if there's no new recovery high. And I'm watching this really closely. Why? Because if there's a market pullback, does that mean to say that the dollar finally starts to pull back? Oh, it has gone to a leg F. There's no other way that I can count it right now other than F/A. So I'm going to go with F just for the moment. So this is going to be very important. Why? Because if the dollar pulls back and the GLD breaks out to the upside, goes from the 115 area it's at right now to the 117.30s, that'll probably take the dollar down. So let me do this. Do we have any calls? No, not right at the moment. So now I'm going to go. So we've got that. We've got gold right now is up. No, let me just move this away here so I can see. Gold is down a little bit. It was all over the show. It was down, then was up. Last night was down. There we go. So gold is down 70 cents at 11.96. Silver is at 16.40, up 5 cents. High-grade copper stuck at the 3 level, 3.06. Now, this is going to be very interesting because you've got EUR/USD. This is the euro dollar. Had a sharp plunge to, is that a new? No, it just missed making a new low. 1.2357. 1.23618. So just a fractionally higher high from that arch formation. Oh man, this is going to be so interesting. The euro is right on the cusp of making the H pattern to either break down or break up. And at this particular point, based on the 120-minute chart, it's looking quite good. And the USD JPY, oh, what an interesting week we've got here. The JPY is A, B, C leg, C trying to go back to the recent high of 118.971, made at 3 o'clock on the 20th. Oh, I'm very intrigued with this. There should be a new recovery high and the USD JPY to go to 118.972. At that point, there could be a leg D in the daily. There will be a leg D in the weekly. And a leg D in the monthly. We could be ready for a little bit of a sideways move. I'll be right back. Basil Chapman, Packet Conditions Hour. Dow's down 6, S&P's up 3. I will be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi folks, Basil Chapman, Tiger Editions Hour. Dow's down 5, S&P's down up 3, and I had a couple of questions. Let me just get to this. Well, first of all, Guild was the first question. Guild is Gilead Pharmaceuticals. Had a spectacular move, went to leg E, and I'm almost sure that it's going to make a peak E this month with a high of 116.83, 116.83. Type that in, 116.83. And last month, and if it closes, it looks like it's at 100.24, down 35 cents. It looks like it's headed to the 94.85 support level, but there is a Chapman Wave Roman candle. I'll show you right here in the weekly chart, right there, perfect Roman candle, and that says that if you close above a Roman candle, just off the all-time highs or recovery highs, you can have a move to upside, but there's a really good chance that at some point, fairly soon, you will come back and test the wick of that candle. If Gilead goes underneath 97, if it closes under 97 any week, 2 out of 3 times in any week, what you'd be looking at is that the weekly chart will point to that candle's low of 91.73. Wow, it's 12 points away being tested. But there's an important moving average right here. That's a 32-period moving average with a level of about 95. That'll be the key support. But if you close, as I say, underneath that 97 area, watch out, because you could go down really quick. On the upside, all I see right now is a bounce potential, and the bounce potential has 102.5 to 103.75, somewhere around there, has very strong resistance. So that's that. The next one was, I know I read earlier that there's a news coming out in Gilead. Hey, they could have a fantastic spike to the upside. It's a biotech. That's what happens with biotechs. They spike to the upside. All I'm saying is that at this particular point, without that news, it's a real problem. Question. Basil, would you consider IBB a parabola yet? I forget the formula for parabola. I need to look back in my calculus book. You know, I do parabolas on the stock market a little differently. For instance, IBB, which is acting very well, it's up 2.93 at 2.97. It's the biotech iShares for the NASDAQ. What I usually term parabolic, here we are. Let me show you something very interesting. Right here. QQQ. This is parabolic. Let me show you something. That move that occurred right there in the monthly chart, I don't have it on a daily, but if you looked at the daily chart in the QQQ series going to the March 2000 high, that was parabolic. If you looked at some of the stocks like AOL and others going into the highs, those are the best parabolic stocks to look at. But I will show you something here in the QQQ. At this particular point, I'm not prepared to call it parabolic in the monthly, even though it's starting to really accelerate to the upside. But I will draw for you the pattern that if from this low bar, the candle of the October the 15th, the low of last month in the QQQ series, without much of a break at all in the next month or two, starts to see the QQQs going to the 112 to 111 area, that will become parabolic. There's just no question in my mind. So parabolic is actually that extension. And I would prefer to always look at it in the longer term, because in the short term you can often look. This is on the short term. I looked at the stock just this morning. Was it Apple? Yeah, Apple. Apple is parabolic in terms of the daily chart, but it hasn't reached the climactic level just yet. But it has got the Chapman wave 1-to-1. It's a stalk-like formation in its purest form, right there. So there's a measured move, that's the propeller shaft down. There's the oval, that's the fulcrum there. And now you've got a parabolic move to the upside. And that says, in Apple, there could be a move that takes it to new parabolic right there. And that takes it to, I don't have the level right now because it's being covered, between 122 and 124. Somewhere around there, it's at 117. That's another 5 points high. If this move just continues straight up. Why? Because if I see an extension that's gone above, that looked very sharp to the upside, and then breaks any consolidation level and doubles it, that extra acceleration up, the rocket ship up, invariably at some point gives back all the gains back to the propeller shaft level, and that would make 109 to 108 the support to watch in Apple when it finally turns down. But so far, it's the holiday season play. There's just no question about it. So I'm going to do a couple of other things when I get back here. I'm going to talk about what I'm expecting over the next week. And I will be doing Daryl's show today at 1 o'clock. So in that hour, I'll be doing very short-term charts just to show you certain aspects of the Chapman wave. I'll be back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Technomental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Each and every time that the dollar ticks higher, S&P wants higher price. Each and every time that the dollar's ticking lower, guess what? S&P wants lower price. Dollar, the metals, and the S&P are going tick for tick.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks. I have in front of me here Art Plus Performance Friday. This is from the Boston Globe G-Section. This is really interesting. There's an exhibit going on at the Museum of Fine Arts here in Boston. And it is called, I saw it a moment ago. It is called, okay, there he goes. Planes, Trains, and Automobiles. Selections from Jean S. and Frederick A. Scharf collection. This highly diverting assembly of transportation models, posters, designs, and yes, toys runs through May the 10th. And what is really fascinating about it, they've got pictures. I meant to show this to my subscribers this morning. I will do that if I remember tonight to post it. It shows a 1929 Golden Arrow car. That's from 1929. I mean, it looks unbelievable. It's like a rocket ship on its side. It shows it also has engines, some fantastic, the 1934 Burlington Zephyr train. So I will try to get this, maybe even in the next break, I'll see if I can get that up. And why is it exciting? Because questions I've had about talking about major tops in the market. Do you realize that some of the most exquisite design in automobiles, airplanes, even ships was made in the 1930s in the Great Depression? Because the very wealthy, things like Great Depression don't really worry the very wealthy. So those cars kept going. I mean, the Duesenberg, the 1930, I think it was 30 or 31, Duesenberg, it's an incredible car. It had, one of the things I always look for major signs of a top, is when speed and the size of engines, as well as the size of certain automobile body parts, like fenders or whatever it is that makes up excessivity. In other words, it doesn't have to be there. It's purely design. I thought we were getting just recently when the Cadillac followed the Acura design of making a little V shape in the front. I mean, it might look fantastic. Just don't get a bump on a V shape pattern because, it's both sides. It is, the repair is extraordinarily expensive. But that's the impracticality of the age that we're about to go into. So when we go into, the Hummer, you remember the Hummer was right there in 2000, I think it was. The size of those cars was just unbelievable. The size of the vans that became, they were called, they never used the term SUVs, they were called something. But they weren't called cars and they weren't called gas suckers, yeah. I had a friend who bought one. What a dumb thing. He regretted it from the day he bought it. Anyway, so, okay, now let's get back to our story. Yeah, so I will try to post that. I just want to mention it because it sounds like a fabulous exhibition. I'm looking forward to going to see it. All right, let's get back to our story, bonds. I haven't spoken about bonds other than to say that did I mention bonds? No, I didn't. The TLT is down 25 cents at 119.85. So now look, you've got this big spike in the TLT. That was that spike back in October the week of the 17th, up to 127.68. I always wondered, was that a print error? Anyway, it's there, and it hasn't been erased. Now, let me just see if I can change that. Nope, it hasn't been changed. So that is there. And it's saying that at some point there's a chance that part of that wick will be tested in the 122s. But until then, I think we're just in a trading range. Let me show you something. You remember I drew this, actually I meant to draw it a little bit lower. I had said that I don't think it's going to go that high, and I also don't think it's going to go that low. That's really what I wanted to do, and then I forgot to change it. I said that I think that yields are stuck in a trading range. And until we break that range, and until we really spike in the yields, this is the 30 of the white is the 30-year T-bond yield, the TYX. Until that yield breaks, 31.33 was the high. So until it gets to about 31.58, about 31.58, 3.158%, I think we're just stuck here for a little while. So I don't think bonds are a trade at all at this particular point. But they will be if you break out on the upside. On the downside, and it looks more and more like the downside's going to be tested at 2.96, at about 2.96%. I would say we could be going lower even. So we just stuck until those parameters are broken. Now you can see same thing in the 5-year yield. The 10-year, this golden color. And this is the 5-year, same thing, stuck. So yields, I don't think are really the issue. Let me just move this away. I want to show you something. You see this VIX index made a peak D, pulled back. That peak D was at 38.36, and the most recent high on the this is the XIV I meant to explain to you. The most recent high was 38.44. So 38.44 and 38.36. We made a new recovery high in a U-shaped pattern, and now comes the seriousness of this particular pattern. Why do I call it the seriousness? Because if there is a breakout this week in the XIV, the inverted VIX index, and it starts to push into the 40 area, that's going to be really positive. That will push the VIX index itself down below 12.39, the low of the 10th of November. But actually, it's this low right here, 11.52. That's going to be serious if it goes underneath that. Why? Because it will start to make the weekly chart of the VIX index. Look at this. VIX.X. It's going to start to suggest, and this is what I said to subscribers over the weekend, watch these 5-week cycles, 5 to 7 week cycles. Around about the 5th to 7th week, you start to break to the upside. But you know what? I'd spoken about this 11 years ago, at least 11 years ago. It was more like 12, 13. I said, at some point, the United States is going to have a real problem with the economy. I didn't expect it would be at all-time highs in the 17,000s, but we'd have a problem with the economy, and the Fed will be forced to Japanize our bond yields. In other words, we'll be forced to do the same thing as Japan did, push yields lower and lower until it's almost 0%. So while I'm watching this, I'm saying to myself, okay, where are we? This is the week, this and next week are the two important weeks in the volatility index. So with that said, let's go to one of our favorite callers. We've got, let me just move this up here. We've got Scott in Safety Harbor. Hi, Scott. How are you?
Good morning. Everything, it just, I think another talk show, he always is better than I deserve, and that's the way I feel with this market. But I'm a little confused, even though I did take some profits. You and I went back and forth with Gilead, and it did exactly as you predicted. I took some profits, and then I got back in, and now it seems to have stalled out a bit.
So are you still in the position?
I got back in it now, and I have a large position in it right now.
All right. At exactly this moment that we're talking right now, there's a candle in the 120-minute chart which is concluded. And basically what it's saying is that at least for the next bar, maybe even the next 2 bars, there should be a trading range with parameters. I'll give it to you right now. I'll just first want to draw it right there. With the parameters that I'm looking at, and get rid of this so that I can make a nice clear chart so everybody can see it. Get rid of that. It never did climb up to that level over there, so that's done. That was just drawn in as a potential if certain things happen. Now I like to look at clean charts, so I'm looking at a clean chart. And basically what we're looking at right now is, well, first of all, the Gilead of Sciences is part of, and this is very important, it is part of one of the best sectors in the market for a couple of years, and that is the biotech, the IBB biotech, NASDAQ biotech iShares. The DIB is the iShares. What is the IBB? I think those also iShares. Yep, those are the iShares. So the iShares themselves, now, the IBB is acting beautifully. It's up 369. We actually long this for my opening call subscribers. I had a really nice email. I'll read it just now if I have a chance, from someone who's been trading it.
Can I interject something, Basil?
Yes.
Could the low volume and just lack of general activity be based upon something as simple as many of these traders, I'd say 90% of the hedge funds and large traders, had made so much money in the last couple of months that now with the holidays coming on last week, they're just kind of not at work.
You know, that's a very good point, because the real issue here is to say to yourself, hey, wait a minute, not all, but some of these fund managers have had a fabulous year. The hedge funds have not, but the fund managers have.
And they're saying to
but they're saying to themselves, they want to preserve. They want to preserve the profits that they've got. There's absolutely no incentive right now for them to be taking on any big positions, because if they're wrong and it costs them, they're going to be taking a fabulous year and turning it to mediocre.
In the green, exactly.
So this is what I'm looking at. When I'm looking at Gilead, and remember I'd actually mentioned to you, I thought there were some other better-looking biofarms that would probably have a nicer gain if there was a move up in the IBB. And I'm very concerned, until news comes out to help Gilead, I'm very concerned that when the market, this sector of the market does turn down, and I think that's real close to turning down, to have a big consolidation, that Gilead, because it's been lagging on the upside, will also start to work on the downside. It'll start to pull back. So this would not be one of my favorite ones to use as a trading vehicle right now for this final kind of stage, because I
agree with you that there's better charts, but from my point, looking at the charts, I use charts and news. The news, and not just news in Gilead, but fundamentals, which is like a dirty word nowadays, but fundamentals are important when you're dealing with a biotech.
Yes.
It has so many things going. It's so many things with HIV and all types of various viruses and so forth. So
the only question you've got to have now is, why is it lagging then? Because it's in the news, number one, and number two...
Yes, but it's really out of the news, and right now tech is the stock du jour because of Apple. Apple gets everything interested. The most confusing thing to me this morning was, why isn't Alibaba riding the coattails of Apple in the tech?
That's a very good question. In fact, I looked at it over the weekend, but I completely forgot about it this morning. It was going to be what I thought it was.
They usually cross-contaminate each other, even if they're unrelated.
Yeah, Bob, Alibaba, I think, got hyped so much. And they are selling so much, and they got bond offerings, they got a whole bunch of things. I think it's just the potential here for being a drag with all this other stuff going on, because it should be doing very well. But Amazon, you see, has taken the reins, and it's up 3.24. It's at 335. I must say that we are actually long in my opening call. Amazon, I think it is the Christmas play or the season play. But let's just go back to Gilead. So what I'm looking at here is, I think it has support, but it hasn't got the impetus to rally until it goes above 102.46. It really needs to close. Oh, it's at 163. It really needs to close. Let me just tell you that from my eye, it needs to close above on any 2-hour chart bar. It needs to have one of those bars close near the high of 102 to 102.50. If it does that today, then finally it's showing a little bit of strength to be able to close above the 9-period moving average, which is at 102.47. But most importantly, this rectangle formation with a high of 102.30 on the 120-minute chart, that's a real stinker. I don't know. It's going to be really tough to get through that. So all I'm going to say to you, I do see it having some support here as long as the others keep moving higher. But I do want to say to you, if you're in this chart and this is what you got your eye on, I would not want to see it make a lower low than today's 99.44. If it does that, this is just not the stock to be trading right now for a quick run to the upside. There are much better ones. Let me just have a look at Celgene.
This is going to be very frightening to you, Basil, but I never, ever use stops.
Well, you don't use stops, but you're right there, correct? You're watching it really closely.
Right.
Yeah,
so I guess okay. I do, because I'm right there every second.
Yeah,
right?
I mean,
I shouldn't tell us
that's like having a stop. But you got to be strict. Don't start second guessing. Whatever your stop was going to be, stay with it.
Maybe next week, if you
Celgene,
could, please.
You see, Celgene, I just want to tell you, Celgene would have been the one to give you the kick that you wanted.
Yeah,
so
I agree, but I because of everything going on with Gilead, and I've gotten such, I've done a colonoscopy on it, so right. I really got my finger on many, many things, and I'm looking long term. I would like, if possible, maybe next week you could do a little talk on Baidu and Alibaba and the relationship between those two, and what Baidu has done in relationship to Alibaba and the
but you know what? You're asking me to do some fundamental analysis. I follow that. I listen to them, but it's just not my shtick. I can do a synopsis based on the technicals, but to do anything else, that's just not my area of expertise. Hey, good luck for this trade. We're going to be watching it closely, Scott. Thank you so much for calling.
Thank you.
Folks, we'll be back.
you take a hands-on approach to managing your investments. And whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartley's, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Hi, folks. So I just wanted to read this because I think it's very interesting because I sometimes get asked about the IWMs and what do I think? Well, I use the IWM very much like GE. Sometimes we're long, sometimes we're not. But and the IWMs I don't necessarily use as trades, but I use it very often as an indicator. So I have an email from Dale says, great work by you on the morning call, especially BIB. That's the IBB 200% long, the NASDAQ ETF. As I've been tightening up my stop during the day and getting profits profits on every trade by buying the dip. Could you either let me know your thoughts on IWM, either in the morning call or in the mail? I did that this morning. I showed in the email. In my opening call, I did the IWM. Most of this year seems to be the leader for direction, either up or down, before other indices follow. I agree. That's the point that I was making. Interesting part of the puzzle. And then I had another one just a moment ago asking me a question about why don't I use the X right here. I'm not going to find it in time because I want to go to our next caller. But it's the XT. I wrote it down. I always forget the XRT instead of the RTH for the retail stocks, which is just unbelievable. The RTH at all-time highs, and still with Christmas to come and holiday season to come. Anyway, let's go to Aiton in Tampa, Florida. How are you?
Good morning.
Good morning. How are you doing?
Very good. Thank you for having me on.
My pleasure. Your question is?
I'm looking at UNG. I'm in a trade right now, a bear call spread.
Yes.
I'm wondering what you think of it going to be able to stay under that $22 range.
Okay. So I missed it. So you're actually looking for it to pull back, right?
To stay below 22. I already went.
Okay, 22 is the number. Okay, that's what I needed to know. Now, look what we have. We have 100. This, folks, we're looking at the United States Natural Gas Fund trading at 21.96, down 52 cents. It made a peak E in the Chapman wave, and I put my down arrow right there. That's what you expect from a DE or an F. And it pulls back, and 21.28 is the 200-period exponential moving average support, which held beautifully when it came back down. Let me just put this, the 120-minute chart, back on the 13th and 14th. However, this is a very, very cold period, and I would be a little hesitant to kind of fixate on looking at natural gas as if it was going to go lower and lower. I'm kind of in your camp in the sense I'm saying to myself, wow, natural gas right now should be at UNG should be not at 21.95. It should be at a 24.50 or 25.50 because of the cold weather, and it's not doing that, and it's pulled back very sharply in the weekly chart. So this is what I'm going to say to you. I don't know how it would work out because it is in the seasonably, this is when you would expect natural gas to be moving higher, but at the same time, it is not doing anything special. So I'm just going to say to you, I'd be a little cautious. That to me would not be my favorite trade in the sense that you've got time working against you because it really needs to, if it's made a low of significance in the 1918 area back on the 27th of October, by Wednesday or Friday of this week, we should be seeing UNG trading at the 2250 area. So all I'm going to say to you is what you want to see is that any bounce fails to close above 2250 to 2460. Give it a little room, but it must not close anywhere close to 23 in the next week. If it does, I would say to you that I wouldn't hang around because you know how quickly natural gas can move both up and down. That's number one. But number two is that if, perchance, today's Monday, if by Tuesday afternoon or Wednesday morning, it is trading under 2139 to 2130. Stay in the position, but start thinking of taking a little bit off to give yourself that room because there could be a bounce at any point with the bad weather still to come. Hope that helps you.
Yeah, I think I'll probably close it today. Just think about it already.
Okay, then call me again next week. We'll look at it.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This is TFNN.